Hey, Tyler, are you ready to talk about a potentially transformative idea that sounds incredible on the surface, but oh boy, is it super risky? And are there some pretty pie in the sky promises being made to investors?
I mean, you always bring me to dunk cold water on whatever high flying perspective idea there is out there. So, yeah, I'm sure I have thoughts.
So, we're going to talk about the metals company, ticker TMC. This is one that floats up every so often over the past few years. I think the company was called Deep Green, and it went public via SPAC in late 2021, kind of in the middle of the mania. But even back then, they ran into some issues with their SPAC and the capital that they raised. But here's the thing, like, I don't want to dunk on people's favorite idea, but I do want to highlight the great story that they're telling and then kind of unpack the massive amount of risk that's here. Just talk about the math a little bit because it's so important when you're investing. Stories are great. Stories are often really good at getting capital from us, but it's math that turns that capital into value for us over the long term. There's a lot of massive assumptions being made here that the math doesn't necessarily check out. You ready to dig in?
Yeah, let's do this.
All right, I'm Jason Hall. He's Tyler Crow. This is Investing Unscripted. This video is sponsored by The Motley Fool. Talk about a good reputation for some amazing stock picks over the year. Go to our special link and you can get access to The Motley Fool's 10 best stocks to buy right now. That special link is fool.com/unscripted. Again, fool.com/unscripted. You can get access to The Motley Fool's 10 best stocks to buy right now. Okay, Tyler. So what exactly is the metals company? What is their business and what are they trying to do?
It is a very ambitious idea. There is parts of the ocean floor that are, for the most unscientific term possible, basically littered with tons and tons and tons of critical minerals that the world could use for kind of the advancement of a lot of things we have seen happen in recent years, whether it be the electrification of vehicles, just actually the electrification of everything, lithium ion batteries, things like that. We're talking about minerals like copper, nickel, and manganese, the core minerals that we see outside of lithium that you see in batteries, or we find in wires, even some rare earth minerals that are used for critical magnets. There's a lot of things that are on the ocean floor that we need. Problem is extracting them is
Right.
exceedingly
Well,
difficult.
well, they form in these nodules, basically like lumps of stone, right? Is the idea. And the idea is that they're just there waiting to be collected. And that sounds simple. It's like they're just there ready to be collected, but you've got 2 miles of ocean sitting on top of them. That's where simple is it easy kind of comes in, right?
Yeah, it's a very ambitious product. The metals company has identified what they see as a very large deposit of these nodules in this place called the Clipperton Fraction Zone. It's kind of not too far off of Hawaii, somewhere between US and international waters. That's a little bit of the debate here. And the idea being is we think because the deposit of these nodules is so great in this particular zone, we think we can actually extract it. Again, I'm going to use very unscientific terms for what is a very advanced scientific project, but basically they want to use giant vacuum cleaners or dredging machines miles and miles down to collect these things and then start to process them into the minerals and metals that we need.
Again, on the surface, this sounds really great. And in application, it would be because you think about traditional mining, it's not great for the environment at all. We know there's lots of issues in the mining industry broadly. And we also know there's a lot of geographical constraints on that, and that a lot of those resources that are being produced are coming out of parts of the world that aren't necessarily politically the most favorable places that basically have monopolies over these supplies. So there's certainly a lot of supply independence that's important, national security, if you want to think about it, for the US and Western allies. Those things all sound great, but where things become questionable is, again, the story sounds awesome, but it just kind of comes back around to the math. So I would just want to share on the screen here. And I know I'm probably going to lose some of the bulls that love the idea of this here, but this is a really important thing to talk about. First thing is the market cap for this company. The mania for the metals company back into the zeitgeist again. The stock has jumped up. You go back into 2023, there was a period where the stock was, we did a video back then talking about it, and we got yelled at a whole lot by people that were super bullish, and the stock basically went nowhere for the next year and a half. And now it's caught up in it again. It's a $2 billion company that has never done a single dollar of revenue. This is all still startup, developing the technology, trying to get permitting and approvals to be able to do this sort of thing, and running a business that's just basically an idea in the attempts to get approvals to be able to do this without a proven technology. When I say proven, proven at the depths that they're talking about being able to do it with a shoestring budget. Business has $116 million in cash, and it's going to cost billions and billions of dollars to do what they're talking about doing. And that matters because the math here is paying for it. And how do you pay for it? You sell more of your stock, take on debt, maybe form joint ventures with other underseas companies, maybe partner with the companies that do all the subsea work in the oil and gas industry that have experience operating at depths, but then you're giving away a lot to do it. So the point is, this is the thing that I wanted to stress with this story is right now it is just that. It is a great story, but it is a story with an exceptionally low likelihood of turning into returns for investors. Right, Tyler?
Yeah, look, this is even though the metals company is a unique story, there have been a lot of very unique mineral and mining stories over the years. They're not exactly the same as the metal company's compelling story, but they kind of rhyme. And that's, I think, something that people that need to keep into account. They tend to tout very, very large resource deposits that require some sort of special environmental review, permitting, logistics.
For context here, the metals company is talking about what it says is enough supply to replace the entire U.S. transportation fleet with electrified vehicles. That's how much supply they're talking about.
In theory, it is there. But the thing is with mining is there is lots of other very, very large resources available, even on land, but they're very expensive to extract. The economics of it make them cost prohibitive to extract. One of the things that tends to get misconstrued with the metals company proposal is the cost benefit analysis of this. And I don't mean that just from the environmental, political, logistic. And that's where I think this story gets wrapped up and very challenging to unwind is we're talking about critical minerals. We're talking about national security. Basically, we're talking about things that are not investor things like returns, math, like actually generating free cash flow to return money to investors. And that's where this story becomes very challenging. We're talking about repurposing major oil and gas production vessels, which are by themselves multiple billion-dollar assets. We're talking about bulk carriers in the dozens to move all this stuff. You start tallying it up, and we're not talking about raising a few $100 million. We're talking about raising billions upon billions of dollars just to get this off the ground. And that's where it's going to be incredibly challenging for any investor in this is the amount of capital that this business is going to have to inhale for decades, probably, before it actually exhales capital and makes a return. The ability for them to get there could be, and they might not even get there because it is metals and mining. There's always the supply and demand component of prices where there has to be a certain level of price for these particular projects for them to make economic sense. And as far as the presentations that the metals company give, there isn't a lot of very clear perspective on what are the prices of the minerals that we're going to extract that we need to make this a profitable endeavor. And that's a thing that you'll see across a lot of mining industry projections and free cash flow statements is basically says, hey, at copper at something dollars a pound, this is what our profitability looks like. We don't really have that here because it's all still kind of in theory. And so for investors, I would love this to work just as much as anyone else, not from an investing perspective, but from this would be very effective in solving a lot of problems that we have when it comes to supplying minerals. The problem is it's so expensive. It could be, it would be hard to generate a return if the amount of capital that they're talking about to make this happen and the costs of dredging and moving all this stuff on a ship to processing facilities that aren't yet built in the United States, you start tallying it up. The money gets really big, really fast, and it's really hard to see the metals company as presently constructed being able to pull that off.
I'm going to share one last chart. Let's follow this line here, the tangerine orange. And this is the share count from when the SPAC merger was completed, 225 million shares, roughly double the share count over that period of time. The blue line is total assets and the purple line is cash and short-term investments. We can see that the company has sold stock, raised cash, and steadily depleted that cash. The cash has gone up recently, right along with share count. Even as the company has issued more stock, all that has done is keep the lights on. Right? They have yet to raise any capital to fund the actual implementation of their plan. right? So investors, if you want to make money on an idea, you have to remember that. This is where we are with this business. It's great to love an idea, for it to be great for the world, to be good for the environment, and all of those things. Tyler, I agree with you. It'd be incredible for humanity if this proves out to work. I think right now the risk for investors is enormous. And it's the sort of business that I would think would be I would suggest would be a better idea. Maybe buy a few shares so you pay attention to it, or just put it on your watch list. Let them prove something that they can do, some sort of feasibility, demonstrate some sort of feasibility. Once you start to see whether there is an opportunity for it to be a good venture, a profitable business, even though the stock price might be higher than it is today, the threshold for risk would be substantially lower. Then it would be a lot more compelling to me.